changing. Upon leaving here, as you go back to your businesses, you're going to have tools to work with your lenders. You're going to have ways to collaborate with them in methods you never thought you would be able to do. You'll leave here being able to talk about systems and processes for managing the change. You'll leave here with the benefit of knowledge that others have learned, the resources that they're creating, and the priorities that you need to take back to your individual offices. You will be armed with tools to talk to your realtors, tools to engage in critical conversations that need to occur sooner than later, and tools to collaborate with them as they prepare for August 1st. And perhaps most importantly, a toolbox that has the resource to engage with the consumer, to have the conversation with the buyer and the seller, helping them understand the value, the importance of why the CFPB thought it necessary to slow down the process. And you know, I couldn't agree more. And I think all of you, as you sit and think about closings that you've participated in, things that have happened in your rooms when things get rushed, there's not a clear understanding of the real estate transaction. And so slowing down the process, giving the buyer time to clearly understand the financial obligation, to understand making sure that they made a mortgage choice that is appropriate for them. Helping the seller as we move forward with this paradigm shift, understanding that last-minute changes may be difficult, if not impossible. To make sure that clear and concise contractual obligations will become critically important for timely and effective closings. You, every one of you in this room, are going to become leaders in your community. In your market, you will help define and set the expectations in managing the next new paradigm shift in real estate closings. At the TRID forums, which, by the way, would you please all join me in recognizing the work of Steve Godheim and his team? Amazing. Back there. What he has done is phenomenal. And Steve, you have set the bar so high for everyone in this room to carry out the work that you've done. We have 2 remaining TRID forums, one in Chicago, one in DC, and just like all the others before that, they're sold out. Thank you, thank you, thank you, Steve, for all that you did. In Miami, we heard from a lender that said what a great opportunity and how helpful it was for him to hear from settlement agents about the challenges and solutions that that settlement agent was coming up with and how they could work together to address the problems approaching. The opportunity for us as settlement and title professionals to engage directly with lenders and others, industry members in all roles, have provided very useful information in this collaborative process. You will leave here today with the insight that is being learned at those forums. You will be able to take that insight and put the conversation in motion to discuss realistic expectations for timing of what's going to happen in the closing world after August 1st. Will it occur? Will a closing occur in 30 days? Or will it be 45? You're going to be prepared to have that conversation and work with your partners to figure that out. But you know, after we look at what's going to happen in August 1st, and beyond, do you think it's going to be all over? I certainly don't. I think that we've got a lot of challenges ahead of us. And like so many other industries that have experienced dramatic shifts in the way they do business, and I'm sure you can all think of many industries like that, those changes, those industries, those businesses continue to morph and change and adapt and meet practical applications and solutions for real-world situations. When we think about change, perhaps the industry that I think of most often, and maybe it's because of my travel schedule right now, is the airlines industry. And you know what? Somebody said the other day, do you think they're ever going to be perfect again? Of course not. In fact, sometimes it might be feeling like they're getting worse. But you know what? They've found it necessary to adapt to a changing world. They continue to be challenged by meeting the cost of fuel, the cost of employees, addressing the security issues that are out there. And have they found it necessary to create a great customer experience through technology? Where did you buy your last airline ticket? Where do you track the status of your flights? It's all through technology, and they have managed to continue to keep that industry moving forward. Pressure points were, and they continue to make changes within that industry to address the needs of us, the customer. Those pressure points are very similar to what we're going to experience. And as title insurance and settlement professionals, I have every confidence that we're going to experience similar pressure points, but that we'll be able to meet the pressures of that change. And working with our partners, I would think that after August 1st, after we've experienced many of the pressure points that we're discussing today, we will absolutely find a way to accommodate those changes and work with them. But these new rules provide an additional challenge to our industry. We've talked and worked and made sure that people understand the value of title insurance, but yet the CFPB chose, in all their wisdom, to make the most important product in our industry, the most important product we issue, as optional. A consumer's largest investment, their home, the very product that provides the most secure and financial coverage for that home, and it's optional. Does that bother you? Are you concerned? I am. But you know what? It's also an opportunity. We now are tasked with making sure that consumers are educated early on in the process when they're buying their home. We have an obligation to make sure that they understand the loan process, but we'll have the opportunity to talk to them early on and understand that part of that loan process includes protecting that investment. Why? For the one-time fee, yes, the one-time fee that we charge, it may be the single most important safeguard that they purchase. And we get to sell that to them. We get to help them understand why it's important. Why we shouldn't be valued, as our critics say, based on the claims we pay, but rather on the work that we do to make sure there isn't a claim, there isn't a risk, and we don't minimize any kind of risk that a home buyer might have. That we, do minimize the risk that the home buyer might have on their investment. Want to make sure that they understand that that one-time premium gives them that peace of mind for their home purchase, for that largest investment they make. We all know the stories and the antidotes, but we haven't done a good job of sharing them. Now we have that opportunity. We've been slow to engage, and now the time is critical that we start talking about the importance of the work that we do, the work that each of you in this room provide, and that your team back home is working on right as we speak, closing transactions, ensuring that largest investment. During the work that ALTA did last summer in researching the background and information that we need for our consumer messaging campaign, we learned through focus groups with realtors, lenders, and buyers, many in your markets, about the confusion that exists about title insurance. And that probably doesn't come as any surprise to you all. Few recognized that we had two types of policies. We learned that they lacked a clear understanding of what we do, what we insure, how we price our products. Real estate professionals clearly said, as we listened to them in these focus groups, that we need to sell our own product. It's not up to them. That we need to provide that education and that resource to their consumers, to their buyers, so they make prudent business decisions. You'll leave here today with those resources. When you return to your businesses, you'll have the resources that will allow you to have that conversation, to provide that education. You'll be given the tools to ensure that that home buyer will have the peace of mind that their investment is protected. ALTA continues to lead the way in creating many additional tools and resources which you'll learn about while you're here. As this work and journey continues, new products are being developed as we speak. A TRID DVD training tool is being rolled out just yesterday. It was announced to you all. It's been created for companies of all sizes so that you can take it back and begin to help set expectations within your organization. It will provide the information and detail that many of us are needing, not only about the rule itself, but also a clear and descriptive way to work through the forms, explaining how they're used and how they need to be populated. The team at ALTA is also created model presentations, ways in which you can have the conversation with your customers. It provides slide templates to use in presenting and setting the stage for collaboration with your lenders, in having that critical leadership conversation with your realtor. I can't imagine a greater opportunity than taking these templates, branding them with your company logo, and going out and having a lunch and learn or a business over breakfast with your customer. Can you think of a better way to engage, to help people understand? We've got 42 vendors next door here to us, along with the ALTA team, that will take you through the many steps that are necessary for August 1st. You'll leave here with a toolkit full of information so that you can grow your business, you can better engage with your customers, and you will become the expert in your market. Conversations about the best practices also are critical and must continue. I hope that every one of you in the room are working hard to implement the standards of best practices. Someone said to me yesterday, they're hard. Somebody said to me yesterday, they're minimum standards. You know what? Both those statements are absolutely correct, but we can do it. I hope you're working on them. I hope you're meeting the challenge. And I hope you understand the importance of making sure that through the implementation of best practices, you can give the assurance and confidence to your real estate professionals about how seriously we take the responsibility of the real estate transaction and the proprietary information contained therein. We can do this. I have every confidence that we can. Our toolkit that I keep talking about, and I really do believe it to be a toolkit because it keeps growing and it becomes the thing that makes our business, my business, continue to thrive in this environment, has best practices all over it. The CFPB is here to stay, and we need to make sure that we give the lenders in this room and the lenders back home, a way to easily assess and eliminate risk in dealing with their third-party service providers. And best practices is the very best tool out there. I'm very, very proud of the commitment that our ALTA Board of Governors continues to make regarding best practices. We continue to debate and make sure that that tool, that assessment mechanism works in the industry and provides the solution that we need. And ALTA continues to develop resources for you as our members to implement that extraordinary tool. One of the newest matters that we have put out there and we're rolling out today is the Compliance Management Report. It's an interactive tool designed and created by collaboration with many of you sitting in this room. It was designed for you to sit down and complete about your individual business model. What happens in your office to meet the standards of best practices? And then you can complete it and give it to your lenders and anyone else showing that you meet the standard of best practices. I encourage you to take a look and use this resource. It's a tremendous asset for your business. It's just one more of those valuable resources for you to go back to your markets, go back and have those collaborative discussions. Collaboration everywhere with your customers and your real estate professionals. You can find out more information at alta.org/best practices. As an agent, yes, I'm a very proud title insurance agent. As you all know, I love this industry. One of the challenges that I have, our company name is so common and familiar in many states, is trying to make sure that when a lender gets ready to do business with me, they can understand and distinguish my company from others in other markets and areas. ALTA's working on a way to solve that. The Board of Governors, especially Rob Chapman and John Hollenbeck, are working very hard to initiate a project to address that very solution of identifying ALTA members and title insurance professionals. They are coming up with a database system that is an ALTA ID to clearly make sure that our lenders will have an easy way to identify and distinguish individual companies. But we need your help. So I would ask all of you, when you return back to your offices, you would take a moment to go to alta.org/universal ID, all one word, and make sure that the information in that database is accurate and up to date. We need your assistance in moving this forward. And John and Rob, thank you for your leadership in moving this project forward and working with the ALTA team. It is very important. You'll see more details about this in the April issue of the Title News, so watch for that as it comes out. But you know what? We need to take time to recognize Jeremy Yohe, and I don't know where Jeremy is here in the room, but Jeremy, somewhere out here. I think I need my shades on. His publications, both online and hard copy, are amazing. And the education, information, and up-to-date resources that he provides us are extraordinary. So thank you, Jeremy, for what you do. You know, the ALTA team is amazing. How blessed and fortunate are we to have the extraordinary group of individuals that are here creating the experience at Business Strategies, making sure that back in DC, those wheels continue to operate and advocate for the industry. So Michelle, thank you to you and every one of you as part of the ALTA team, and we see them all around the room and throughout the conference. Thank you all very, very much. You know, when I took office last October, I knew that we were going to have a year of change. But I think probably I was pretty naive in thinking about how significant this change was going to be. But you know what? As I've traveled around, as I talk with all of you in this room and others across this great nation, I know that this industry that I care so deeply about, can accomplish every bit of this challenge and even more. As I said before, we have a great, bright future, and I have no doubt about that. When we sit here in this beautiful city of brotherly love, I'm reminded about many great events that took place right here in Philadelphia. In fact, the very first title insurance company was formed in 1853, the Law, Property Assurance, and Trust Society. What a great place to be today. The first Continental Congress met here. The second Continental Congress, and try and say that fast, met here, and they signed the Declaration of Independence right here in Philadelphia. Feel that energy, feel the challenge that those early Americans felt as they were making challenging and critical decisions about laying the foundation for this great nation. We're the title insurance industry. We know the value that real estate transactions, both past and present, continue to bring in the value and development of our great nation. I'm proud that you're here and that you're committed to the challenge before us, and that you're going to go back to your communities as experts with that full toolkit in order to talk and educate consumers, realtors, and your industry partners on how to prepare and engage for August 1st and beyond. Yes, this is collaboration. It's collaboration everywhere. And together, you and I are going to meet those expectations. Thank you so much for being here. Thank you. So now let's get to the real meat of the program, shall we? I'm so honored to bring up our panelists for our first discussion today. I'd like to have them come up on stage and join me, and we're going to have a conversation about TRID. I'd like to welcome Penny Reed with Wells Fargo, and we've all had the privilege of getting to know Penny and her team very well. She's a tireless traveler in making sure that we understand what's happening within her world with TRID. I also am so fortunate to be able to introduce Bob Kelly with Bank of America. Bob, thank you for joining us today. I was asking for a little background about Bob, and somebody told me he was a New York Giants fan. Be nice to him, be nice to him. And then certainly, thank you so much, Dottie, for joining us today. Dottie's with Trident Mortgage and brings a perspective perhaps that we haven't had the benefit of hearing. And so we're looking forward to the conversation with each of you as we go forward. We want to make this a conversation. We want to try and address many questions and concerns that you all have out there. And we're going to have some of the staff around with microphones and try and interject questions and concerns as we move through this panel too. So we're looking forward to having the conversation. Thank you. So I have water here. Do you all need some water?
I brought mine.
Yeah, okay, great, great. Everybody's mics are working?
Hello.
Oh, yeah.
Hello.
Good,
Hello.
that's great. Well, thank you. So as we've moved forward with the implementation of TRID and the conversation continues, there's been many discussions about how decisions are being made about who's going to be doing what and how that integration. So I think the first one is what's driving decisions within your companies on who's going to prepare the documents and deliver the closing disclosure?
Well, I'm sure everyone is, if you haven't, we'll get you a copy, has seen the newsletters we've been sending out. And one of the first things we wanted to do was make that particular decision about preparing and delivering the CD as we communicated. And essentially what it came down to is looking at the two laws that were combined, RESPA and TILA, and deciding whether or not we could delegate any of that TILA responsibility in the way that you can under RESPA, the way that the wording is in RESPA. And we just could not get comfortable with delegating truth in lending responsibility. So once you combine the two forms, that basically told us we were going to have to prepare that closing disclosure and be responsible for tracking the delivery. And it doesn't mean we're preparing it in a vacuum. We understand similarly the way the HUD one is prepared today is a collaboration between the lender and the settlement agent, with the final version being produced by the settlement agent. This would sort of be the reverse, a collaboration on all the numbers between the lender and the settlement agent, with the final version being produced by the lender, by us.
By you. Okay.
And that's how we got there. It was simply, if you think of it today, I don't think any of you prepare truth in lendings for your lender. And that's what it came down to.
Okay, great. Bob, Dottie?
At Bank of America, we also knew that was one of the first decisions because we knew it was going to trigger a lot of the workflow. We also expected it to trigger a lot of conversation. We felt that we needed to be in control of the closing disclosure. One, to make sure it hit the mail on time, and second, so that we could control how the collaboration was going to happen. That's a popular word today.
Yeah.
Between us and the settlement agent, as we get into that window where everybody gets excited, everybody gets a little antsy. We just felt we needed to have control of the closing disclosures. We ran down that path.
And Diane, we just felt that the CFPB made it clear that the liability and the accountability for the accuracy of the document sits with lender. And so from a risk perspective, I think my mic. Okay. So from a risk perspective, we just felt that we needed to own that process.
Great, great. So, one of the things that I always like to continue to remind, especially title and settlement agents, that the rule clearly recognizes the importance of title and settlement and that experience in the closing and signing ceremony. So I don't think that any of us should be fearful that we're being eliminated or that the services that we provide are going away. It just is being approached a different way. And I've heard from many of you talk about, you know, how important it is to be able to continue to use title and settlement agents across the nation to make sure that that you have that experience with the customer through that settlement agent.
Right, and absolutely. We, when we're talking about we're preparing the CD, we absolutely are not preparing that part of it. We still need all that information, all that local expertise that exists out there in your worlds to make sure that we have that closing disclosure correctly. And in fact, you'll probably be hearing from us a lot earlier in some cases to make sure we have that loan estimate correct and based on that local market knowledge that you have. So it is definitely a collaboration and maybe a shift in the timing, but yes.
Yes, good, good. That's great to hear. So as we talk about planning for this collaboration. What are you asking or needing settlement agents to be doing today?
So, and I think a little bit of this probably covers Penny and I at Bank of America. You know, one of the things we want is engagement. We want settlement agents getting engaged early, understanding the rule, looking at the documents, and then we are going to use the closing agent portal, and we need settlement agents to be ready to register. We want to make sure we get everybody registered before August 1st, so that when we start the process and we go to send our first loan to close, you're not having to scurry around behind the scenes to figure out, how do I get signed up? How does it work? What am I going to have to do? So that's the one thing that we think is doable very in the short term. And the other is feedback, right? We're trying to get to where we make your lives easier, because we know we're going to get you engaged in the closing process earlier. We've got to get the closing disclosure out. We're going to wrap everything up 7 days before a closing date. We can't wait for transmission of data back and forth 24 hours in advance. So getting your processes prepared to handle a closing disclosure that's likely to hit the mail 6 to 7 days ahead of the closing date, that is going to cause all of us to have to redo some of our workflow processes, some of the things we've come accustomed to do. But what we don't want to see is closing dates just be moved out. We want to figure out how to change the process so that we can all meet the same date we would have met today. Is that a challenge? Yeah, it's a big challenge. That's why everybody's here, is to figure out what's the right way to do that. But that's the biggest things we can have, get you to do now.
Dottie, the same sort of approach?
Absolutely. We just are hoping that our title partners kind of examine their current workflow process and maybe recalibrate how they do things, so they're ready for the new requirements and the new delivery timeline.
Right. Okay. Great. How are you all planning on managing the 3-day rule? Have you set rules or guidance in place as to how you're going to deliver that and meet that?
Yes. And I think depending on, am I on?
Yeah. I think we're having some trouble with the mics.
I can talk loudly.
There. Oh.
Hello. I think that with the different lenders are going to handle the 3-day rule differently. There is one default sort of position. You can, one, hand it directly face-to-face to the consumer, and then it's delivered. That is a rare occurrence, as we know, in today's environment. So everything else pretty much falls under what's called the mailbox rule. So whatever day you're sending it out is day 0. You count 3 days, and you can assume delivery at that point, and the consumer needs to have it 3 days in advance. Can everybody hear me? Okay. So no matter how you look at it, that's roughly 7 days. And my best guess is a lot of lenders, creditors out there will follow the mailbox rule as their default position, so that even if they choose another method of delivery where the CFPB did leave room in there to say, if you have evidence of receipt prior to that, whatever your legal is going to determine evidence. So if you use a courier and the consumer actually signs for it, then you can count that date. However, if you can't get that evidence and you haven't mailed it, you're starting from scratch with the 7 days. So for the most part, I would assume creditors are going to send out, and if they use another method, it's going to be because there's a rush on something, or they're going to use it as evidence of receipt, but it probably won't change the closing date because the CD will have been prepared based on the 7 days. So if you move it up, you then have to change it again. So as much as it looks like it's flexible, it's not really all that flexible. So if you think of all the things that occur today, the day of closing, sadly, they should occur a little earlier, but some of the things that occur today, the day before the day of closing, all of those are going to need to occur 7 days before the closing.
Actually, that's good news for us.
Sure.
We're glad to hear that. So,
While it's good news, try to have that conversation with a teenager that the 3-day rule takes 7 days. I knew I wasn't smart when I started it, but my son is home from college on spring break, and I learned I'm really not that bright. I think the other thing is we're going to see everybody's reaction to this 3-day rule change over time. I think, you know, at Bank of America, we're going to overnight them, but we're still going to observe the 3-day rule because there's so many people a part of the transaction that aren't going to sign for that FedEx package, or the FedEx package can't be delivered that day, or whatever it is. But I think we're going to see us try to look for ways to shorten that window by being able to find ways that you can get receipt without having to, you know, track it around or hand it to people physically. But I think if I was a settlement agent, a title agent, I'd be happy because we are going to drop something in the mail at Bank of America 7 days before the closing date. So we need you to be ready. We need the customer to be ready, because if we don't mail it on this, you know, if we don't have it cut off so it goes in the mail the next day, 6 days in advance, that closing date's not going to happen.
So Dottie, are you considering doing any kind of electronic delivery, and what are the parameters around that and the requirements that you need in order to meet that?
Well, our preferred method of delivery is going to be DocuSign,
Okay.
but we are going to still follow the mailbox rule as far as our process and timeline goes, because we just aren't sure if, you know, everybody has the, you know, is interested in receiving the documents that way. So that's our preferred method of delivery, but we're still going to be, like I said, following the mailbox rule.
Okay. And DocuSign is, could you tell us a little more about what that process
Just
entails?
electronic signature.
Okay. And it needs to meet certain standards that are defined in the rule, is that correct?
I don't actually know about the standards that
Okay.
it's supposed to meet as from a delivery point of view, but it's a really quick and easy way to get the document out. Can you hear me?
No, wondering.
They'll figure it out. We've just found it on the application side of the transaction for it to be a real, thanks. We can share, okay. For it to be a real effective process. So the borrower will get the e-signature document, They'll execute it, and then the clock can start ticking right then with the 3-day requirement.
And I think it's important for everyone to recognize that just because it's emailed doesn't mean that it meets the standard of electronic delivery, that it has to meet an e-sign standard.
Yes, there are very specific rules around e-receipt.
E-receipt, yes.
It has to be followed.
Right. So, okay, great. So once you are moving forward and have determined the delivery process, how are you talking to your customers and getting realtors especially to understand how to manage their contracts and the expectation of their customer?
We started working with the folks at the National Association of Realtors last year, and actually had a meeting with their executive board in November on this subject. And then Steve, who we congratulated earlier, he's very engaged with the NAR folks, and they are working on communications that they're going to be getting out to their realtor base, because you know, it really starts there, and they need to understand that the closing process has changed, the time is being extended, and right now the advice that NAR is giving realtors is based on their market conditions. So whatever their normal market conditions are today, add 15 days to that process.
Yeah, I think Steve's got a mic here, but I think we could pass it around. I don't know whether our systems are cutting out too much bounce back.
We've been doing the same with the builder community, working with NAHB. The thing on the builder side that they need even more understanding around is the impact of how two dates coincide, which is there's an ACOA Regulation B appraisal delivery rule, as well as the closing disclosure delivery rule. And those two rules don't exactly match up. And in new construction, when you have a lot of things happen at the last minute that require an updated appraisal, you may be within the closing disclosure timeline, but you may then need a new valuation that has to go to the consumer. And that starts a different timeline, so your closing has to start again. So we're talking a lot with the builders.
With the builders, absolutely. So,
We have an education and training committee that is going out to our real estate partners, and we're doing introduction to TRID overview presentations and helping them understand the new documents and also how the effects are going to impact their business.
all right.
Yeah, I mean, I think we're all trying, we understand the front of the process is about education, the back of the process is about training, because you actually have to execute something. We're trying to talk to every realtor group that we can get in front of, any builders that we can talk to, because we know they are the start of the process, and we want them to get customers into the mind frame that if I want to close like I did before, I have to be ready. And that whole education process of the realtor community is going to take some time. I think what we've seen is, all of us, software providers, lenders, we've been deep into this for about 14 months already because we had a lot of technology stuff to do. I think we had settlement agents start to listen to us end of last year. I think we're starting to see realtors start to listen to us now as people are starting to say, okay, where is that next thing going to happen that I've got to change to? And I think that's what we're seeing from the realtor community.
Is there a particular takeaway or message that we in the title and settlement industry can help convey to realtors and home builders in the process?
Yeah. From a realtor perspective, we really would like to see them get very conversant with the LE and the closing disclosure.
Okay.
So they can explain to customers that the GFE and the HUD-1 are gone, and here it is. And then I think probably every one of us and everybody out there has this some version of a timeline slide. What does the customer have to do to actually hit that closing date that they want to close on? Don't change your product in the last week, right? That's a really bad idea unless you've got time. Don't come back and make some adjustments to where the interest rate goes up. All the things that you want them to avoid to change that closing disclosure from when you send it out. We really want the realtors to be the one driving that message early in the process that says, really know what you're getting into and make the decision right up front.
Yeah, lock your loan details in early.
Okay.
And there are things today that tend to occur at the last minute that we'll be talking to realtors about, and it's things like, don't wait until the last minute to get the well and septic cert because you're afraid it's going to fail. You need to find out early that that's happening, because in the new environment, that is not something that the borrower is going to make some decision to close and you'll get a one-day delay. That starts a lot of timelines over again. So we're talking to them about those sorts of things.
We've even had some real estate partners talk about the possibility of having 2 inspections. One maybe a couple weeks before the closing to identify any of the big issues that could potentially, create a delay of closing, and then maybe a final inspection the morning of closing for the minor.
And that's where it's one of the things that we've been talking to them about, and it's been coming up in the TRID forums, is conversations they need to start having with their sellers that they never had before. And because you've all seen those events where on the day of closing, everybody shows up, they've just done a walkthrough, and it turns out the seller moved out and took all of the appliances, and they weren't supposed to. And they try and negotiate something at the last minute. They need to have these conversations with the sellers that they could blow the entire transaction up doing that, because it is those sorts of things that the CFPB wants the timeline to start over for. They want the consumer to have time to think about what they're getting into. So it's not going to be one of those where they negotiate at the last minute and I'm going to get seller credit for X number of dollars. They've got to start talking to their sellers well in advance.
Yeah, the CFPB does not see the delay of a closing as a bad thing.
So we all sitting in the closing space, working with buyers and sellers face-to-face, know that change occurs. And it will happen after August 1st, too. I have no doubt about it. It just isn't going to happen. What are going to be you all's expectations on how we manage that last-minute change? What can we do or what can't we do? What do you expect us as a settlement agent to do?
My usual answer to that is read every creditor's closing instructions carefully. They're going to have a lot of do's and don'ts in there as far as what you can and can't do. Part of the issue is there are many rules layered on top of rules in today's environment. So there are things today that you've learned even in the past year couldn't be waived because of the QM rule. That QM rule will still exist after August 1st. The appraisal delivery rule still exists after August 1st. So depending on what that change is, you may have to adhere to another rule. The lender's going to have to say yes or no, it can happen, and they're going to have to make the decision, yes or no, if that starts the time clock over again.
And I think that the important thing you said is the lender has to make the decision, yes.
I think the best thing I could recommend is read the closing instructions when you get them, not when the closing is about to happen. I think we're all having to redo the closing instructions, and there'll be, you know, a very large amount of them that aren't going to change from one to the next, but then there'll be some that are very specific to the transaction that's going to happen that day. And I think we all would like to see the process happen earlier, where you're looking at them, you're understanding what you have to do, and if there's questions, we can work them out during that period of time when we actually have time. Because on the day it happens, it's going to be too late. So I think that's probably and they're going to change. I think everybody's closing instructions are going to go under some significant revisions.
I think there are a lot of companies like ours that sell a good portion of their loans to aggregators. And the aggregators are creating their own overlays and really driving the requirements from a delivery perspective. So things aren't clearly defined yet from what their position will be.
Okay. Would you talk a little more about the aggregator situation and the concerns that this new rule and process brings?
Well, from our perspective, like I said, a good portion of our business is sold to aggregators. And when you're selling your loans to many different aggregators, they each have their own overlays. They each, have a different appetite for risk, and so they may, one investor, may have no tolerance for any sort of change at the table, and someone else may feel a little more comfortable with it. So it's a very difficult process to kind of manage. And I think a lot of your lenders are going to be experiencing similar types of things.
Right.
We're not in that business, so I'm pretty happy.
No. Well, I think one of the concerns that we all continue to hear and experience today is what we call a back-to-back closing, where seller is selling property, the purchaser, and the seller's taking the proceeds to go purchase another property. And I know that in our offices, the concern is, what happens if one of those fails and needs to reset, to redisclose? Any things you guys are putting in place to kind of help us manage?
Well, I think the first thing you'd probably come up with a term for that is a bad day.
Bad day. Got it.
And it is. The dominoes have to fall in place. If the loan doesn't, if you have to redisclose on one of the loans, the first one, the second one's not going to happen on time.
Right.
And I think that is another piece of the realtor part of it is they no longer are just worried about the transaction that they're bringing to you that day. They've got to be worried about the one that's in front of them, because if one stops, the other's got to stop. And I think Dottie kind of hit on it, this idea that you could just, it's a financial hardship, just go ahead. The CFPB has said, the fact that your stuff is in a truck and it might cost you some extra money, that's not a financial hardship. That's just part of what happens. And you're not going to see a lot of exceptions to these rules. I can guarantee you we're not going to be making a lot of exceptions about financial hardship, because the CFPB has made it very clear that there's really not too many that are going to be looked at as favorable.
I can tell you that when we did the first TRID forum in LA, one of the folks there mentioned that they're going to invest in those pods, the company that has those, because there are going to be a lot of the situations. And the back-to-back closings are going to be the most difficult. I could suggest that you just bring them all to us and we'll coordinate them, but I don't think that's going to happen. So we have to learn how to coordinate, and a lot of that coordination is going to rest on the settlement agent, because we won't know necessarily that there are back-to-backs depending on it. So that's something, if you can see it very early on in the transaction, you'll need to get in the habit of letting the mortgage specialist, the processor, whoever know that there are back-to-backs involved in that transaction so they can capture that information and plan for it.
Well, that's really good advice. You know, oftentimes, though, we don't necessarily know the particulars of the subsequent transactions.
Right.
And oftentimes they're occurring in other offices, maybe with competitors, or even out of state. So it will be challenging for us all. You all mentioned closing instructions and how important they were going to be in the process. Are you all working on those updates now, and will we get to see those in advance of August 1 to begin to understand the expectations that you have?
We are working on them, and they would be available somewhere before July 31st.
Thank you.
Ours are targeted to be ready in May.
Yes. That'd be great. That'd be great.
You didn't put a year. So we are updating ours as well. I think the key is there's going to be ones that are general that you can look at in advance, and there's going to be those things that become very specific to transactions that you're going to have to see when you get one of those unique transactions that happen.
And just remember, there are still answers that we're working on with the CFPB. Steve and a group with the MBA have a list of questions they're still trying to get answers from. And some of those, if we get the answer, will impact the closing instructions. Right. So that's part of what's slowing everybody down a little.
Exactly.
It may be a good idea for settlement providers to reach out to the lenders that they work most closely with on a frequent basis ahead of time, maybe in the April, May kind of time frame, to find out what their requirements are going to be and put together some sort of, strong matrix for their team to follow.
Exactly. Great point. Another tool for our toolkit. Reach out and talk with those lenders. So, well, I don't know about all of you, but I can feel the energy in this room in wanting to ask questions. So if the three of you would be all right, would you mind if we opened it up to some questions from the audience?
Just as long as those blue things aren't to be thrown.
No. Okay. So, yes, I think we have a question over here.
For Bank of America, when do you believe that the web portal will be available for us to register?
So, and it's not from us, it's actually, because it'll apply to a number of the lenders that are going to be on it. It's a really C tool called Closing Agent Portal, and I'm going to look down the row at somebody who works for me, because I think we've been told that they can start registering in April. Yes, April.
Okay.
Thank you. Get in early.
Okay. Yes.
I know that you're going to hear this statement a lot, but read your closing instructions, because I think different lenders are going to require different things. And we're looking at the closing statement issue right now as far as what we're going to require from the buyer side of the transaction versus the seller side of the transaction. We want the closing disclosure, the seller side closing disclosure from you. On the buyer side, because there are those weird instances where the title insurance is going to be quoted incorrectly, although legally incorrectly, on the closing disclosure, we're going to want the closing statement that shows the correct numbers so that we have the ability to match everything up. There are also going to be instructions on how to reflect that credit that you need to, or that adjustment that you need to make, so that the closing disclosure balances with cash in and cash out, because of that one number, the title, the owner's policy versus the lender's policy, and the way the law asks it to be disclosed.
And actually, that's a great question, and thank you for asking it. One of the many tools that ALTA is continuing to work on is designing a template for that settlement statement to make sure that those figures are accurately reflected the cash to close works out. So you'll be seeing that rolled out here in the very near future as well, so that there aren't multiple different kinds of that form out there, and more of a template rolled out for our lender customers to expect. So I'm having trouble seeing around the room, so Steve, you're over here. Yes, please.
Bank of America mentioned that they don't obviously acquire loans, but considering Wells Fargo acquires most of the loans in the country today, and aggregators obviously are what a lot of us deal with on the purchase side, because that's a highly fragmented segment of the market, as well as refi. But what is Wells going to do in terms of the overlays that were mentioned by the lady from Trident relative to that? Because I know the Closing Insight message went out, most all of us got that, but what other layers can we expect to be dealing with? Will 7 turn into 12 or 14 if you're reselling that loan to Wells? So.
As far as I know right now, and they will be communicating out from our correspondent channel, their expectation is that you meet the requirements that during origination that we have to meet. So our expectation is every loan is originated the same way, essentially. And they'll get very specific with the instructions they send out, but it's not going to be necessarily just a situation where you can say that you follow that process. In the methods we use today to audit you, or in data elements that we may require you to send us, we're going to be looking for proof of that timeline. So some evidence of it to back it up.
Yes, here in the front row.
Currently, we submit a HUD to you for approval. On the closing disclosure, we do all of, or on the current HUD, we do all the prorations. On the closing disclosure, that's information we're going to be providing you. Are you going to be sending some type of pre-HUD back to, or pre-CD back to us so that we can say, yes, these prorations are in the right place, you have all the fees before you send it out?
And one of the reasons that you'll see constant sort of reinforcement of our encouragement to use Closing Insight is that tool will allow us to collaborate on that closing disclosure and see, both of us see the changes that are made and both agree on it. In those instances where you're not hooked up to that, there's a portal that you can use if your software doesn't integrate with that. So that's why you'll see a lot of lenders saying, okay, here's our software solution, because we're all going to want a way that we can both see that form. Same way we do today, where you do the final form, but we tell you you have to fax it to us before you can actually do the closing. And it's going to be the same process where we both have to agree that that's correct.
And even companies that won't be, is that working? Even companies that won't be using the interconnected portal will still be working. Thanks. I'm struggling with this. Will still be wanting you to review and approve the closing disclosure before it goes out to anybody. So in our process, we'll be gathering in collaboration with you the documentation that we need 10 days before closing, and then preparing the closing disclosure, sending it to the title companies for their review and approval. You'll be sending it back before it goes out to the consumer.
So we got a question back here, Ben. You do?
Yeah.
There, okay.
Hello, thank you all. It's exciting to see all of you up there. I had an event yesterday that I was talking to the Education Committee about, and it's the first time I've seen this, and just wondered if any of you could weigh in on it. I had a lender request the 1099-S from the seller to be able to complete their closing funding. And it's the first time I've ever seen that happen. It's a concern, obviously. And they also wanted them to fill out a FERPTA document. So is that something you see in the future?
I have no idea.
No clue.
All right. Okay.
Alma, I can say that my usual thing, read your creditor's closing instructions.
Okay. Another question over here. If you wait till we get a mic, I think it's easier. Thank you.
Hi, thank you. Couple of questions. We are starting to go out to realtors and lenders and kind of do lunch and learns and training sessions. One of the questions that has come from those is whether the lenders are going to wait for a clear to close before they send out that closing disclosure, or will you send it out and then technically send it maybe to underwriting to get that clear to close, and that thereby maybe adding additional days to the process?
A lot of that is going to depend on the risk appetite of the creditor.
Okay.
If they have 100% confidence in their process and they can do that, I think that would be kind of a risky thing to do. But it could vary based on how that creditor feels about their own process abilities.
I'd like to speak to that too. One of the things that we're going to do is actually to change the way our process works internally, to where we're going to have a loan application kind of going down two highways at the same time. One will be the typical clear to close credit decision pathway, and concurrently there will be another pathway for the closing disclosure. So we don't anticipate having to wait till your loan gets clear to close and then start the process going with the closing disclosure timeline. That will be running concurrently.
Great. And then if I could ask one more question. The proof of mailing, is there anything, the FedEx you mentioned would obviously give us proof, but if you actually are putting it in the mail, is there anything to say, I threw it up there, but the mailman didn't get it on Friday, he really got it on Monday, that is going to be first-class mail documented proof?
So I think that challenge, which is, you have the same challenge with, you got to provide the appraisal and a couple of other things. So, we can prove when we mail something based on when we printed it, when we put it in the mail. But to eliminate all that stuff, that's why we just felt that the FedExing, the closing disclosure is just going to be easier on us to prove. When we get the burden of proof on us, we just felt that was an easier way to go about it.
And remember, with the mailbox rule, you don't need evidence of receipt, because you're just calculating the 3 days from the time that it was put in the mail, and then the clock starts ticking. So if we follow the mailbox rule, we're not as obligated. We're not obligated to get confirmation of receipt.
One of the questions that I've heard at the TRID forums is around that very issue. If we're not delivering the closing disclosure, the lender is, there is no burden of proof or evidence on the title agent that in fact the lender met those delivery requirements. We are not the policing agent, is that correct?
That is correct. The liability sits with the lender.
Okay. Okay, thank you. Ron, I think you had a question over here?
Yes. Can you hear me? Okay, is that better?
Yes.
One of the problems with the CFPB disclosures, as I'm sure you're aware, is that the cost of title insurance is not going to be correctly set forth for the consumer. So I'm wondering, from all of your points of view, I assume that you're going to do the disclosure the way the CFPB is requesting. So how then does that jive with state laws that require something different? Are you concerned about that? Are you going to be talking to the states about that, or is it something that you're just not concerned with?
The easiest way to answer that is to say that the closing disclosure is not a state form. It's a federal form. It's not a closing document. It's a disclosure document. So you are going to need to, as a settlement agent, follow your state law for what they require. For example, some states do require a signed closing statement where the borrower signs for the disbursements. That can't be the closing disclosure. If there's a signature line on the closing disclosure, it has to specifically say it's not obligating the borrower. So it is going to vary by state what additional documentation that you add through the CFPB's effort to reduce documentation, right? Because there's the federal rules versus the state rules. And we are, yes, going to follow the federal rules for the federal form.
Because we don't believe there was a problem with the CFPB rule, just to be clear, because we're all...
Okay. Okay, I think we have a question over here.
Hi, good morning, thank you. So in speaking with my colleagues, I think what we are worried about is sitting at the closing table and a change, a utility adjustment or a walkthrough item that doesn't necessarily affect the APR. So I guess I will upload those changes maybe to Closing Insight. Tell me about the process on the other end. Your staff that will be sitting there, hopefully just dedicated to my closing, and giving me immediate approval to have that closing disclosure used. Just looking for what your process, what you're thinking on that end, turnaround time.
Well, from my perspective, it's easy to address because we're a smaller local lender. So we will be having staff dedicated to your closing, so the turnaround time will be quick and easy. But I'm sure it's a much more complicated process.
We actually have 5 people dedicated to you that are waiting for your call.
That's great.
And that's the whole reason we're going to drive closings through the closing agent portal, so that you can drive it through closing agent portal to us, get approval, and be done. Now, granted, if everything works right, we're hoping we're not getting those surprises in that last 3 days, but we all know it's going to happen. But we probably aren't going to have the person who you know every time that you're calling. But the idea of the automation is not just for that, but for everything in that closing process, right? You think about how many faxes go back and forth, how many emails go back and forth that aren't found or received or noticed. The idea that the collaboration module within the closing agent portal is so that we're both seeing the same things in real time and we can approve it and you can move on.
And you're going to likely see a lot of specifics in your lender's closing instructions about what kind of things can change, which ones require actually reprinting the closing disclosure, which ones don't, what the processes are for changes that you need to make immediately after the closing. When the rule originally came out, it had a very small threshold for changes, like $100, and essentially the industry went, oh, and sat down and talked with the CFPB about how frequently those kinds of changes happen. And so they've left quite a bit now of leeway in there for those kind of changes to happen. And there are different requirements depending on if you find out about the change before the actual closing date, we can issue a new CD and it can be presented at the closing table, versus if it happens immediately after the closing and an updated CD has to be presented. So there's a lot more flexibility than originally was there.
So I think, Steve, we have a question over here.
Thank you. I'm glad Diane brought up the topic about what to do in a back-to-back closing, and you have changes that come up and what's going to happen there. I think some of us could take comfort in the realtor community coming to our rescue, because I think when they figure out that if they disclose to us information that will cause a change, that will keep their customer having to wait in town, the truck loaded on the street with their furniture, the purchase of the new home that they wanted delayed, I suspect that they're not going to talk to me, that they're going to go with the closing, and that there'll be another closing either at their office or out in my parking lot. Do you think that's a possibility, or is that...
I think in reality it is a possibility, and it's one that we've alerted the CFPB to, that there may be disadvantages to the consumer that are created by that very situation. So the consumer has to decide between, do I want to get this $1,000 credit and postpone the closing, or do I just want to take the risk that I'm never going to see the $1,000, right? And I think that's why with, how many people today are still making changes because of the 2010 RESPA changes, it's going to be an evolving thing. It is such a radical change. I don't think anyone knows what the outcome will be, but my guess would be if the CFPB recognizes that something in this rule is disadvantaging the consumer, they will make changes. And their process calls for, if they make changes, they have to put it out for public comment. It's a very long process, which is why they're not making any changes in this environment. But after implementation, we can raise those sort of things. We're very worried about the unofficial outside of closing things happening that disadvantage the consumer.
So you raised a good point. We all recognize that for an unknown period of time, we will continue to have transactions that need to close on the 2010 HUD-1, and we will have closings that need to occur with the new loan estimate and closing disclosure rules. How are we as settlement agents going to know and understand which transactions will fall under which processes? Have you all thought about how that will move forward?
The closing instructions.
The closing instructions.
I think are going to be very clear, depending on how the loan was originated versus how it closes. And there is going to be a whole window of time where normal sort of QM eligible, LE and CD eligible loans and HUD-1 GFE loans are going through. But then remember, there's also a certain population where the HUD-1 is not going away.
Right.
So that, everything that lenders are building are still going to accommodate both forms, partly for the transition period and partly because the other transactions that aren't going away.
Yeah, no, same. Just to reiterate that, yeah, there's going to be transactions where you're going to be having the new closing disclosure for the first mortgage, and maybe there'll be a home equity line of credit as a second, and that's going to be using the current HUD-1 thing. So, as Penny said, you just have to really pay attention to the closing instructions from each lender.
Right.
And I think we're going to, probably the biggest concern I think we'll have is people are going to get through closing insight and really we think are going to like it. It's going to be very collaborative, going to make the job easier than these other things that aren't going to be on there. Because if it's going to be a GFE and a HUD, it's not going to be in closing insight.
Now, one thing I thought of, I keep forgetting to add, is if you're working with lenders today and you don't understand their closing instructions, let them know. Because as they're working to change them, if there are already things that are very unclear, they may not know that. While there's good conversation going on between lenders and you guys today, it's a lot of times we have found that settlement agents are reticent to speak up to lenders in a complaint fashion to say, I have no idea what this means. So but if they're unclear, you need to start talking to them today so they can start making those changes. Ours are perfect.
And I just so it is known, why I think, Penny and I keep talking about closing agent portal and closing insight. We're not doing it in a vacuum. We've got representation from the settlement agent software providers are involved in it as well, because we know that it's in all of our best interests across lenders and providers to try to standardize some of these things that are problematic. And to be honest with you, as a lender, things that we don't feel are a differentiator or a part of our value proposition, if we can make them easier on you, we're trying to do that as well.
Gosh, we have lots of questions. But Ben, I think we've been waiting back here.
Welcome to the great Northeast. As you know, around here, there's a lot of attorneys involved in the closing process. There's sellers' attorneys, buyers' attorneys, bank attorneys. Are the sellers' and buyers' attorneys being educated at all? And then can the disclosure be sent to them as opposed to the borrower?
So we're looking for, and there's a couple of networks we've been able to get ourselves plugged into to get in conversation with them as well, because we realize there's a critical part of the transaction, and education for them is important as well. One of the things we've looked at is even those transactions where there's attorneys involved, in, I think it was 99.7% of the cases, we currently deliver our closing documents electronically. So we believe that those folks are set up to take it electronically, should make it easier on them to deal with. So we believe they're going to be in the same mix as a settlement agent, and the biggest part for us is getting into them, conversations, education, so that they understand what's coming.
And I think the answer to that the last question you asked, the creditor could probably deliver it to you and the consumer, but they must deliver it to the consumer.
David?
What's going to be the role of the realtor at the closing table? Are they going to be allowed to attend the closing with NPI concerns? Are they going to be welcome as we've heard different opinions from different lenders?
Yeah, I don't anticipate any changes in that.
I think the one thing that we have gotten from realtors is, can they get the closing disclosure? They will have to get the closing disclosure from their customer. We will not distribute the closing disclosure to them.
All right, we had a question over here.
Actually, 2 questions.
Okay.
The first is when you send that CDF to the borrower, what instructions or communication are you giving them as to who to contact? The purpose is for them to question and get answers. Who will they be contacting in your organization? The processor closer, the loan officer, the title and settlement agent? Who will they be asking questions to? And the second question is, with Closing Insights, will that just be used for the preparation of the CDF, or will the funding process actually at the settlement table go through that, or will we still be faxing over documents and getting funding approval separate from Closing Insights?
Could you all hear the question? Okay.
I wanted to know how our hair looks so well.
Well, I can speak to your first question.
Would you
the first question, if I'm saying it correctly, was basically how we're going to be communicating with the consumer about the CD, what the process is going to be, or who from our individual organizations is going to be having that conversation. Is that pretty much? Right, and who will answer their questions when they after they review the closing disclosure. And my answer to you would be, I think that's going to be different depending on what each lender and what their process is. For my company, we've created and changed the way our closing department will be handling their workflow. And we have added a new team of what we're referring to as closing disclosure specialists. So that team will be preparing the closing disclosure, getting it approved by the title company, then getting it out to both our loan officer and the consumer. They then will be following up with a phone call to the consumer to discuss any details, and there will be a point of contact within our organization, one person that particular consumer will call and discuss the details of the closing disclosure if they'd like. Okay. And with your second question, though, I'll refer to Bob.
So for the first question at Bank of America, we're going to do if we have a closing date set, 10 days before that, we'll do a pre-closing call so that we can, first of all, walk them through the closing disclosure, reinforce the idea that, hey, the less change, the less likely it is that date's going to be altered. And then that's who they'll talk to as they get through the process. But again, think about it. How often do you have a pre-closing call 10 days before closing now? That's what we're talking about. Everything has to shift to the left in the timeline, because if we get, a pre-closing call on day 7 doesn't really help us because it's going to go in the mail the next day. So I think that concept of a timeline and getting something visual that you can get comfortable with, for us, we have an old timeline and then a new timeline. And really what you end up seeing is everything shifting to the left about 10 days, because we know those things used to happen right at the last minute. So I can't answer your funding question at this point. I don't know.
Bob, I do want to mention one thing. Just one thing that I think all of you need to consider going forward. When a lender's going to be sending the closing disclosure to you for your, approval, they're not going to be giving you a lot of time. It might be a day. And I think you have to figure out in your organization who you're going to identify as the point of contact to receive that closing disclosure from the lender, for you to give the green light for them to proceed to send it to the consumer. And if you're choosing the point of contact to be your settlement officer, well, they may be out traveling all day, going to several different closings and everything. And then if the lender is expecting that approved document back within 24 hours, it might really bottleneck your process, and you might want to kind of re-examine who the point of contact will be on your end.
And I think your second question was that today's funding process involves a lot of faxing of the HUD one before you can actually get the wire for the funding. And again, this is the reason everybody is heading towards systems like Closing Insight, because we can do that process of agreeing right there. So we're not waiting for you to fax us a form to agree on. We've already agreed on it on the system itself. And depending on how it works in your software, we have the ability to lock it down so that everyone knows that's the final form and you wouldn't need to do that whole faxing process.
Other questions? I think we had one over here. Yes?
Regarding 1031 exchanges, do you perceive that the taxpayer who might not qualify for the 180 days as being a bona fide financial hardship?
It's a very good question, and I know it's one of the questions on the list at the CFPB right now. They have been probably more clear about bona fide financial emergency than anything else in their answers. Basically, so far, nothing we've asked has been a bona fide financial emergency.
Question over here? Yes, sir, please.
Yeah, I have no doubt that our industry is going to rise to the occasion. And we're used to working under pressure. So the idea of us getting something and only having a day to deal with it, that's not a problem. We do that every day, all the time. I want to get back to the 5 guys that you got sitting there waiting for me to call, Bob, because right now we send all this stuff back.
I didn't say you had 5 guys.
That's good.
All right, can we negotiate that? Maybe 3? So right now, just what you were talking about before, sending the stuff back. A lot of lenders, yours included, require us to send back a ton of documentation to get funding approval. Money's in the bank, people have signed everything, they're waiting to go. 2 hours later, we're still waiting for funding approval. Is Closing Insight going to change that? Because at some point, a real human being has to look at that and say, yes, go ahead, right? It's not just a matter of putting it in the computer and then everything's grand. Somebody has to look at it. How are you folks addressing that?
So I think the first piece is the idea of the collaboration in advance should eliminate some of the, miscommunication, challenges, information not necessarily being understood in both places, to where if you can get it locked down before we get to that closing table, we should be ready to say yes before you get there. The other part of it is workflow changes, right? Because we understand that we've got to be, if we're going to have a tool that allows us to collaborate when we're doing it together to make sure there's no, there's no misunderstandings or email sitting, we've made organizational structural changes to make sure that a closing group that is now dispersed will, while not be completely centralized, will come together closer so that we can have more people focused on that 3-day window when the CD is out there getting ready to go to a closing than where we would have now, where closes are dispersed across the country for us. So we're going to change both our workflow, but structurally how we're organized around doing some of these things. Some of the stuff has actually already happened. We've made changes internally already, moving people that when they get the tools and you got something that comes through closing agent portal, make things a lot easier than trying to figure out where the email or the fax went. So I think we're taking steps already to try to make this smoother, but we also know that we've got to be locked down much earlier in the process than we are today, which should eliminate some of those surprises at the end.
Okay. We had a closing over here, or question, excuse me.
Okay, we locked
Closing
down
too.
We lock down on the buyer's side, no issue. On the seller side, day of closing, they show up with receipts or I should say bills for pool work done or something of that nature. How, if any way, is this going to affect you guys? If we don't see that it gets paid, of course, that potential lien rights would come into play there. So how it's going to affect with you guys in that?
So you're saying there would be changes to the seller side of the transaction?
That's correct.
And so our expectation would be you would handle those as you do today. Everybody's closing instructions, again, are going to be very specific about the seller side of the transaction as well, what we need to see and what we don't need to see as far as there are a lot of activities, and in fact, a lot of last-minute changes occur on the seller side of the transaction. We need a copy of that seller CD, the final version that you're doing there. The law doesn't contemplate giving the seller the CD early, so the version we get is going to be the one you did at closing. As long as those changes don't impact the buyer's side, there's no delay to that buyer CD. Right.
Do we need your approval then? Anything that's changed, flip it back to you guys again?
Well, so they will not have, we will not distribute the CD, or the only way, the CD is going to get to the buyer from you. And then I think it's going to vary about who you're working with, what you're going to have to do. But I think it's, we're going to spell it out in what we tell you can do at the closing table.
So once again, that would be the closing instructions.
I was trying to avoid using Penny's line.
So, Dean, did you have a question?
With all this, talking about real EC and EC closings and everything, do you anticipate a charge in this integration? And if you do anticipate a charge, is the bank going to include it in their fees, or are you going to be looking to the closing agents to add it up into their fees?
Is this for the portals? Yeah. Well.
She got the easy.
Okay.
She had the mic and everything.
Right. Portal.
Look, I would tell you that right now, as it is structured, we will, at Bank of America, we will be paying the cost. For you to sign up, if you are not integrated, if you're going to use the portal, for you to sign up, there's not a fee at this point. You can go in and sign up and register, and then we'll deal with it. I would tell you, we could have looked at this 6 ways to Sunday and come out with a lot of different options that we were going to look at, but this just isn't the time.
And we're pretty much the same. Some of the things that we don't know is you have software licensing agreements with your software providers. I don't know what their fees are going to do, because in the normal course of them doing business, they have to have their fees for upgrades, things like that. So I don't know what those would be. They're all upgrading for this disclosure anyway. So it's not, that was already out there. But as far as the expenses on our end, they're on us.
Well, I know that we still have lots of questions, but I think we also are very excited about continuing to work with our lender partners and making sure that this transition and that transactions continue to go forward in August. So thank you so much for being here and having the conversation with all of us. Please join me in thanking our panelists. And with that, Michelle, we'll turn it over to you.
So that was great. I think we all agree it was absolutely fantastic. Don't leave. Where are you going? As Diane said, people's questions are not over, but I have good news for you. There is 28 hours of Business Strategies Conference left. You can decide if you're going to sleep any of those 28 hours. In fact, we start at 11 a.m. for professional development sessions. You're going to have to fight the people that left early for seats in the front row, but I think it'll be fantastic. Following professional development, we have lunch in the exhibit showcase that starts at 12:15. Our lunch today is sponsored by Fidelity National Title Group. Thank you, Fidelity, for sponsoring our lunch, and the food here has been fantastic, so it's a special thank you for the great food. Vendor demo sessions begin at 12:45. I know the ones that happened this morning were terrific, and I've been hearing great feedback from all of that. So make sure to put vendor demo sessions on your agenda for today. After more professional development sessions, and in the afternoon, the thing we've all been waiting for, our happy hour reception in the exhibit showcase, will begin at 5. Thank you to DataTrace for sponsoring today's happy hour. And for those of you who are up for it and contributors to TIPAC, tonight you can howl at TIPAC at 9 p.m. Xfinity Live. Buses will leave here starting at 8:30. I know they're going to have dueling pianos and lots of March Madness. So stop by the TIPAC booth in the exhibit hall for more information. To those of you who joined us on live stream, thank you. We will see you tomorrow at our general session. It was great to have you here and participate in our panel. And for everybody else, enjoy the professional development.